Cleveland Fed President Loretta Mester has been speaking at the U.S. Monetary Policy Forum. She's offered some commentary on the state of inflation, and what she has had to say has been quite interesting on that front. She seems to be sort of reiterating the issues here, if I can just find it in my many Slack channels here, the text of what she had to say. And I don't have it, but you probably have it.
Well, okay. So she's saying that putting these pieces together for the current economic environment, while it is welcome news to see some moderation in inflation readings since last summer, the level of inflation matters. It's still too high. Policy decisions need to consider the risk around the forecast, but also the cost of continued high inflation to households, businesses, and the longer run health of the economy. This one more line here. Forum's papers projections of recent research from the Cleveland Fed, they suggest that inflation could be more persistent than currently anticipated by many forecasters. Higher for longer, guys. The market's starting to believe the Fed, so it looks like there's a convergence here until the Fed raises their expectations even further, I think, at the next meeting.
I mean, I think her saying that the cost of undershooting on policy or prematurely loosening policy still outweigh the cost of overshooting. I think that's a very key phrase here, that this is still how the Fed sees it. And you couple that with today's PCE data, and you're going to see the expectations nudge even higher, it feels like.
Powell is channeling his inner Volcker. Volcker is the inflation breaker in the early 1980s, but it took him a long time. And Powell doesn't want to repeat the mistake that he let up on the gas a little bit, or on the brake a little bit too much as his Volcker back in the early 80s, and then had to reapply it. So that's what the Fed is trying to get right this time after a number of policy missteps.